Hi, this is Mark with your Forex Analysis for the week ahead. Very tricky week ahead. We have, towards the end of last week, we had some possible major reversals going back months, in fact going back to the beginning of the year for some of the pairs. And to cap it all, this week there is a huge amount of news this week, including the dreaded NFP Friday United States unemployment figures. I never trade that particular day. However, in amongst all the carnage, there are a few potential trades. And one that I have been looking at for the last few days is here on the Euro USD. The Euro USD, unlike the New Zealand dollar and the CAD and the Swissy, so far the Euro has not broken its trend line. We have a trend line here going back to earlier in the year, and this is on the daily chart. What this line here is, this is a 4-hour trend line. Because even though we are in an uptrend here, on the 4-hour, we are actually in a downtrend. As you can see, price was coming down in this direction. So, what I've done is, this area here is the area that I am very interested in back on the daily chart. And the reason is, I am looking here. At the moment, we're in an uptrend. So, at the moment, I am looking for long trades to take a buy. And the logical area for me now, price has broken and closed below the 200 EMA on the 4-hour. So what I'm looking for now is this area of 4,600, 4,620, because it is a major psychological area of support, previous support and resistance. It is the intersection of these two trend lines, and there is the 55 EMA and the Bollinger Bands all in a similar area. So what I am thinking at the moment is that if price was to come down here with a small stop, I would look to go long. If, however, this pair does the same as the New Zealand dollar and a lot of the others, and it breaks out here, then what I will do is later in the week, on the Tuesday, if tomorrow the candle comes down and closes below here, then I will look for a pullback to this area with a view to then going short. So you need to be flexible. Now, I have had, in the last week or two, I have had some brilliant trades on the Euro GBP. And I told my daily followers that initially we were in here and we took some pullbacks on the Euro Pound. We had 3 or 4 opportunities here and an extremely nice fall down here. And then again, on the 4-hour, I mentioned 2 or 3 times this week to look for pullbacks to 89.90 area, because on the daily, this was the 55 EMA. And you will notice that on both occasions, price pulled back within a whisker on this one to the 55. And all I simply did was shorted and shorted. Altogether last week, I had a dozen trades in this particular pair. No losses. There were 2 out at entry and 10 wins. And the Euro GBP is a nice, steady pair normally with a small daily range. And the beauty is, again here, this is the 4-hour. On the 4-hour, price may pull back up here again. If it does, I will look to short. I only need a small stop. If I wish to be careful, I could go above the 200 EMA up here, but really on this pair, I would be just looking simply in this area. And the reason is, say, if you look on the daily, we have broken the daily 55 down. We are in a bearish trend. All the EMAs are starting to roll over. Last Friday was a spinning top pin bar, huge indecision day, but we broke the 90, which was the important bit. And again, here on the weekly, it looks as though the 5.8 is going to cross. Well, the last time the 5.8 crossed on this pair was back in February, and as a result of which price moved hundreds and hundreds of pips. I think it was about 700. So, moving along. The pound I'm going to ignore this week. The British pound simply is stuck in no man's land. It is bouncing between this upper trend line and this lower trend line. And at the moment, it's in no man's land. I will be interested if it gets down here again. If you recall earlier videos, I explained that this is the neckline of a potential 900 pip fall for the pound down here if this head and shoulders pattern breaks. So this area, 63.40, I would be interested. I would look on smaller time frames and see if I can see any clues as to whether price is going up and down. But at the moment, in truth, it's all over the place. Swissy. Swissy has been in a downtrend since the beginning of the year, and this is the trend line that I have going back on the daily chart. This is actually a 4-hour chart. But this trend line was spiked but did not break above on Friday. And what did happen is price came up to the 1028 area on a number of occasions and pull back down. And ironically, my followers would have made more money this week. Beginning of the week here, I said that price was likely to pull back here before falling down. So we would have actually made more money going against the trend. But as I trade with the trend, I am still looking for clues for a short. However, this is looking particularly bullish now. We're riding the 5 on the 4 hour. The stochastics are pointing up. All the EMAs are rolling up. And on the daily, again, we've had a 5-8 cross. This area is huge for this pair. If it shows a sign of going down, I will short. If it breaks up, I will have to wait for it to break this area, close, pull back, and with a view to long. But this is a hugely important area. Similarly with the CAD. Everybody was expecting the CAD to get down to 1-to-1. And what happened last week, the Governor of the Bank of Canada stepped in and made a very hawkish statement saying if the markets continued the way that they were, that the Bank of Canada would intervene. It is detrimental to their economy if the situation persists. So in their own interest, they have flagged the fact that they will intervene in the price of their currency pair, which is a dangerous period for Forex traders, because it's not just normal market price. The Canadian Bank will be in there interfering as well. Now at the moment we're at 78.6. We have broken twice and closed above the daily trend line that goes back to February of this year. So again, this is a huge area. But the EMAs here are rolling over on the daily. We're riding the 5 on the way up. It did close above 1.0800 on Friday, which again is a major cycle level. So there's lots and lots of things to suggest that this is going to go up. And there's also likely to be at market open tomorrow a 5-8 cross on the weekly chart, which again, prior to that, we were in May when the price changed before. And from the previous 5-8 cross, we were down 1,000 and odd pips. Possibly that was one in there, in which case it was 500 and 500. However, this is the huge psychological important area now. If price breaks, again, I need a pullback, I need to come back. And if it's short, I need it to come back in within this area. New Zealand dollar broke its daily trend line and closed below it. The only thing I can see holding this pair now from a fall is the 55, EMA on the daily chart. If you look at the weekly, the 5-8 is not going to cross just yet, but below here there is a lot of space to fall 300, 400, 500 pips. Now, in a way, it's not a bad thing because we've been wanting a pullback on this pair for a long time. Price has simply gone up and up and up all year. So in Forex, you do need moves. And say at the moment, the Bollinger Band on the daily is holding it and the 55. But after that, I can see nothing to stop this pair falling a fair distance. Aussie dollar, as you will know, is 80% correlated with the New Zealand dollar. It hasn't broken down out of its trend line yet. So the area for me next week is here, 88.50 area, above the Bollinger Band, above the 55 EMA, and above the daily trend line. Euro CAD is lining up for a possible triangle breakout. But again, price last week simply moved up, down, up, down, up, down. This is the daily trend line. Again, if it breaks, then there's a potential big move here. If you remember my earlier videos on triangle breakouts, the theory is that the distance of the triangle is the distance of the breakout, which would take you up here. Finally, the dollar yen broke 4-hour trend line. Personally, I'm going to leave it alone. It's sat on 90 now, and all the dollar pairs, yen pairs, I'm going to leave alone. I don't know if you're aware, but the other yen pairs are what's called a cross. And the price of, for example, the pound yen is arrived at by multiplying the price of the pound dollar and the dollar yen. So that's how we arrive at this price. Now, if you're in more than one yen trade next week with all the volatility, you could get badly burned. Please be careful. Have a great week.